Taking a look at the 25k portfolio, we had an equity peak to end the month yesterday on this crude oil trade, this crude oil short on SR counter trend 3 crude oil. Today we have two trades. The highlight of the day so far is gap continuation 2020 plus $1,900 on the day, and Cobra 3 mini Nasdaq stopped out minus 625. We needed about a $1,800 stop loss. We talked about higher volatility and how we will have more trades that were stopped out while also potentially capturing bigger moves. And today is one of those days where it was stopped out, and you see the last big trade was right here on March the 26th. Nevertheless, we ended the month on the 25k portfolio at an equity peak. Here are the results. You see current drawdown is 0. This is as of yesterday, March 31st. Today will be another equity peak if this trend continues. If gap continuation, if the market reverses and gap continuation loses, then it will be we'll start the month out with a loser. But if gap continuation is greater than the loss in Cobra 3, we will end up April 1, starting out April with a winner, plus 27k on the year, 16.6 in March. And so let's take a look at the drawdowns. Quick drawdown here, about $5,000 drawdown on March the 2nd. A lot of times traders that start these strategies at equity peak will quickly get out on a $5,000 drawdown, only to miss the snapback. And so you have to be prepared to endure a worst case drawdown or a multiple of a worst case drawdown if higher volatility conditions exist, as they did in some of the portfolios. And so I would not recommend starting at an equity peak and then just stopping halfway into a worst case drawdown. That's pretty much a guaranteed loss if you do that. So you have to be prepared to risk the amount of a worst case loss or a multiple of a worst case drawdown before starting, to give yourself a realistic opportunity to capture some upside wins in the portfolio. So that is the 25k to 50k portfolio. We talked about yesterday the margin requirements, and these are the trade station margin requirements of 80k. Not all strategies trade at the same time. Today only two strategies are trading, and they trade at different times, and so you have margin for only one. If only half the strategies trade, then you're looking at about a 40k margin requirement and about a 50k account. And so also we talked about margins at other brokers are much lower. For example, TradeStation margins are 6,600 on the E-mini S&P, while a NinjaTrader brokerage margin is 1,000. So you can send your orders, you can route your orders from TradeStation to a NinjaTrader account. I have a trick for doing that, and your margins are much smaller. So that is the 25 to 50k portfolio setup, and the reason we have that range on that portfolio is because margins do vary. So that is the update for today, April 1st, and looking at the equity peak from yesterday.